Hi, this is Optimus Futures, and we're back with our weekly roundup of 5 key futures markets for our viewers. As usual, we're going to be starting off with the light crude oil futures market, which over the past week spent much of the time basically pulling back once again as sellers took control for the most part of the week. For the longer term, we've been expecting this market to possibly continue with the long-term uptrend that we've seen develop over the past few months. We basically created a swing high or resistance around the 6,600 level from where price had pulled back. In some of our last videos, we've been talking about why it was not surprising to see price sort of bounce where it did right around the 5,800 level. It lined up with this former wedge pattern over here, as well as a consolidation box further to the left. Just looking at the bounce that we've had off of this area, had us thinking that we would possibly just see price continue to trickle up higher, hit this more recent swing high, and then continue its way higher up towards some of the more longer term support and resistance levels at the 70 round number and levels beyond. However, over the past week, we've seen price pull back well shy of this former resistance area, which also opens up a new possibility, an interesting possibility, where we're now seeing lower highs in the market. So if price is able to continue its move down over the following week and weeks to come, pushes past this former swing low, pulls back to it, holds as resistance, and continues down, we could well see the development or the potential or possible development of a more longer term downtrend to come, where obviously indicated by lower highs and lower lows. But all of that will really depend on what price does at the 60 round number. It's currently holding really well. We've seen two daily candlesticks with lows sort of wicks protruding into the level and holding as support. We're still sort of long-term bullish for this market, and just looking at the fact that we have a lower high here makes it sort of important for us to mention that if the 60 round number does not hold a support and price continues to push down, we may also see a downtrend develop here, which would sort of either be a more deep pullback into this recent uptrend, or could be a full-fledged downtrend again for the oil market. So that will obviously remain to be seen. For now, we would really just expect the 60 round number to continue to hold a support and price to maybe push higher back above. Now obviously we'll have two hurdles to beat. One would be this more recent swing high that just created last week, and then the more prominent one at the 6,600 level before it can continue further towards the more important longer term support resistance levels around the 70 round number and price levels beyond. Okay, so next we talk about the S&P 500 Emini Futures market, which over the past week was for the most part consolidating within a wide range of price levels that we've been talking about in some of our earlier videos as well. We've talked about how the two important bar lows and wicks protruding from candlesticks around the 2500 level have marked a very, very important low for this market, and also a floor for a possible trading range, with the ceiling being the 2880, 2900-ish level, right from where we saw the sharp selling activity come in a few weeks ago. So for now, we're just seeing price continue to just consolidate and go sideways within this really wide channel here. And we've been talking about how we're looking forward to a more sustained move in towards either the high around here or the low over here, to be able to once again find this market really interesting and possibly even post a more longer term directional bias for this market. For now, it just continues to be sideways. We've had basically a day where prices were higher, and after that we had 3 consecutive days of selling come in, and once again price found support around the 2850-ish area on Friday, and we just pulled back again. So we're really not seeing that authoritative move in one direction as yet to really find this market interesting and possibly lined up for a move in one direction for a prolonged period of time. Okay, so the next market we're going to be looking at here is the gold futures market, which was also for the most part consolidating over the past week. Once again, we did not see any authoritative move in one direction. So once again, we've had over the past week price bouncing off the 1300 round number, which has also been acting as a rather thick but extremely important horizontal support and resistance level for this market. We've seen multiple occasions over the past several months that price has been either able to hold as resistance or as support at this level. Over the past week was yet another instance when price basically pulled back to the 1300-ish horizontal support and resistance level. We basically pulled back to this former low around here. We had a candlestick wick that protruded a little bit further beyond the low of this candlestick over here, and not able to close below, or basically threatened to move a little bit further down. We had a close back above the swing this swing low over here. The next candlestick just popped right back up, as you would normally expect when price is looking to find support at a key support level, as we have the case right here. So for now, we're really just stuck in this consolidation box around here. The low obviously marked off by the 1300-ish horizontal support and resistance level, and this again rather thickish resistance area around the 1350, 1360 level. Unless we see price either pushing past the 1300 level or blow past this resistance level to create newer highs for this market, we really just expect this market to continue to be sideways and consolidate and basically whipsaw around this floor over here, the ceiling over here, and possibly some mid-range levels around here as well. Okay, so next up we look at the euro currency futures market, which over the past week sort of closed neutral, as we had the first half of the week belonging to the sellers, and then the bulls later took on for the latter half of the week to push prices back up to give us sort of a neutral close for the week. Again, we have a more range-bound theme for this market over the past few weeks. We have price basically consolidating within the 1.25 resistance level. We had two very, very stark instances of price bouncing off the 1.25 level. Once based off the bearish pin bar, the second time we had a bearish engulfing candlestick pattern that allowed prices to push lower. However, on both occasions that prices were pushing lower, bouncing off the 1.25 level, we've been unable to see the market basically test the 1.21 horizontal support and resistance level. We've been citing this level for quite a while now, and the reason for that is that it really is a very, very significant long-term level for this market. Not only do we have two very recent instances of price finding precise resistance at the level, we've also had a very, very important swing low being printed off the 1.21 level way back in the past. As you can see, the market, even from this recent push towards the downside, was unable to really push towards the 1.21 level, and we bounced just prior to that. So if you just zoom back into the market action, we can see that over the past week we basically have price push past this more recent swing low that we created, and we were unable to see a sustained move towards the downside. We did have a candlestick closing below the low over here, but the next candlestick was really just a very authoritative looking bullish engulfing candlestick pattern, and the day following that we saw more bullish activity. If this strength was to continue in the coming week, we could see prices climb a little bit further, maybe even for a third test of the 1.25 resistance level, or we could just continue to see price bounce off of more intermediate levels that we're seeing here, in line with the more consolidating sideways weak theme that we've been seeing for this market over the past few weeks. For us, things will become interesting for this market if we see price threatening to push past the 1.25 resistance level, or if we're seeing price test the 1.21 horizontal support and resistance level that we drew just a little bit earlier and brought your attention to. Until then, we just expect this more broader consolidating sideways theme to carry on. Like we said, just looking at the bullish activity here, we may actually see a little bit more, at least in the first half of the following week. Although some resistance at this intermediate level, marked by these few bar lows and a couple of bar highs around here, may actually come into play as well. it's really just hard to tell when the market is just weak overall. We don't have prices moving in one direction authoritatively. Okay, so finally we look at the 10-year Treasury no futures market, which over the past week was able to post a couple of really important developments that we've been hinting at in our previous videos as well. So, especially in the past week's video, we talked about how this former support area is going to be very, very important for a price to find resistance at if this more longer-term downtrend theme was to continue. And over the past week, we saw precisely that. We saw price finding good resistance at this former support area, and we just saw prices push a little bit lower. Although we're still just straddled above the 120 round number, the range here is just very tight for price to be stuck in it for very long. So we do suspect that we're going to see a break possibly towards the downside for this market in the coming week. And the reason for that is we're seeing multiple retests of the 120 round number here without price really rebounding strongly or basically posting an authoritative bullish move off the 120 round number. So we initially saw price, if I just get rid of all these arrows so it's easier and more clear. So the first time we saw price pull back to the push to the 120 round number was right around here. The bounce you can see wasn't really that authoritative. We once again, just 2 to 3 days later, came back to the 120 round number, once again held as support, and just a few days later we were back at this level again, and now for the fourth time we're seeing another bearish candlestick almost closing at the 120 round number. And that to us indicates that price is probably building up momentum to break to the downside, well in line with the more longer term downtrend, bearish downtrend theme that we've been witnessing for this market.